Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. As usual, we will be starting off with the S&P 500 E-mini futures market, which is first of the five markets that we evaluate on a weekly basis. So for this market, we've seen for the last several weeks that the market has been very strongly uptrending, which is a sharp pull away from the kind of momentum that we saw this market post a little bit earlier than that, when the market was consolidating for the most part and just trading in a more sideways range-bound fashion following the sharp drop that we witnessed for this market in February. So just looking at the fact that the market is consistently being able to post higher lows and higher highs here tells us that the market is definitely in a very strong uptrend here. And we can further validate the strength of this up move looking at the fact that the market was past week able to not only break past the all-important 2800 support and resistance level. Last week we saw the market pull back to it, hold as support once again, and continue its way back up, which is a very good indication as far as the bulls for this market are concerned. Obviously this level here, this area of resistance, former resistance that's now turned into support, was one of the more important and key levels for this market. The other one, of course, being just under the 2900 level, where we obviously had this more longer term, and once again a very vital swing high over here. Excuse me. That the market seems to be running towards now. So if this momentum really just continues, which we really do not have a reason to believe it will not, we could see the market actually hitting the 2900 level possibly this week. Or if this momentum, of course, continues, we could see the market even cross the 3,000 level for the first time. So that should be an interesting time to be following this market. And as far as we really don't have any indication to suggest a slowing down of this momentum, there's no reason for us to not believe that the market could well be headed towards the 3,000 level and possibly price levels beyond that in the coming week or weeks to come. Okay, so the next market we're going to be looking at here is the light crude oil futures market, which in a lot of ways has been behaving quite the opposite to how the S&P 500 index or the E-mini futures market has been behaving. So here we have the market in the past posting a very strong looking uptrend with very infrequent and minor non-threatening pullbacks into the uptrend, more towards a phase of trading where we're now seeing more and more frequent pullbacks, and some of them have been threatening as well. So for example, the move that we saw here, this was an extended pullback into the uptrend, even though we did see the market sort of resume that uptrend and basically create a new high for the uptrend over here. We once again in the more recent past saw a couple of days of really strong bearish trading activity for this market, and all of that is really to be expected anyway. If you look at the more longer term perspective for this market, it's really not hard to see why the market could be showing signs of either topping off or at least posting a more extended pullback into the more longer term uptrend that we've seen this market post in the recent past. So just looking at the price level that we saw the market last bounce off of, it basically lines up with all of these very important swing lows that the market posted back in 2011, late 2011. And obviously we now have the market basically flipping very long-term and dominant period of support into a possible period of very strong resistance here as well. So going back into the more recent action for this market, we're basically looking primarily at this rising trend line, which to us is going to hold a very important value in terms of keeping or retaining the momentum of this uptrend that we've seen this market post. For the more recent price action, we're also seeing the market basically coincide with this more midterm support and resistance level that is now obviously lining up with this rising support trend line over here. So if the market kind of breaks underneath these two important levels, possibly pulls back to hold as resistance at either this support and resistance level or the rising support trend line, the market could actually just continue its way down, and we could see the more extended pullback, or maybe even a full-fledged reversal of the uptrend that we're now expecting this market to post, looking at the momentum that we're seeing right now. All of this volatility and all of these extended pullbacks and threatening pullbacks here into the uptrend could possibly be indicating at the fact that that the market here could well be topping off around the $7,500 mark. Over the more recent past, we basically saw the market being very, very tight, just at this support and resistance level once again, which indicates to us that the market could be building some kind of a momentum here, either for another push towards the 7,500 level, or we could, like we said, the market could be gearing up to basically break down underneath this horizontal support and resistance level and the rising trend line over here. So that kind of remains to be seen what this market will likely do over the coming weeks. But for the more longer term, we do suspect this market is possibly just tightening up and rounding up at the 7,500 level, from where it could potentially post an extended pullback, at least into this more longer term uptrend that this market has posted over the past several months. Okay, so next up we'll be discussing gold futures market. So if you've been following our prior videos for this market and our analysis for this market, you would recall that we've been talking about the 1350 major resistance level for this market, and the support level marked by the more longer term 1300 major round number that was previously acting as very strong resistance for this market, and later turned into support to basically allow price to trade in a very tight channel between the 1350 level and the 1300 level. We eventually saw the market make an attempt to break the 1300 level. The market then just pulled back to it and held at the 1300 level for a while. The market just continued to test the 1300 level for its qualities and its value as a resistance level, and then eventually we saw the market kind of break underneath the 1300 level for good. And we've been talking about this for a long time. We had said that for the market, for this gold market to take on and gather some momentum, the market will either have to break underneath the 1300 level, or it'll need to break past the 1350 resistance level, in which case it would have been a move up then that we would have been expecting. But really the market just broke underneath the 1300 level, and since then has been very strong. Of course, the market did hold at this major support level at the 1240-ish area over here for a while. We did have a couple of days of activity where the bulls tried to sort of regain control, and we did see some buy orders come in at this more historic and long-term important swing low. Eventually, none of that really transpired into any kind of serious trading activity from the bulls, and the bears were really just able to retake control of the market. As of now, the market seems to be straddled just above the 1200 level, which is right around here. Essentially, it's really just caught up at this more at this swing low over here that the market formed just above the 1200 level, and you can see the market is pretty much sitting at this level right now. Once again, the prior week of trading was just really tight, where the market really didn't show any attempts to pull back to the 1240 level. Neither did it show any attempts to really test the 1200 level in any serious way at all. Part of the reason could be that the market here is possibly building the momentum that it needs to either test the 1200 level or pull back to the 1240 level. But just looking at the momentum that we have here from the bears, we would rather expect the market to try and continue to push down under towards the 1200 level and possibly price levels lower, as opposed to another push towards the upside and a possible retest of the 1240 area, which is once again this former support area that's now turned into resistance. Okay, so next up we're going to be looking at the euro currency futures market, which has been very interesting market to analyze for the past several months, mainly due to the fact that it has posted some really obvious looking chart patterns, which have also really played out well. So just looking at this downtrend over here, and this sharp move down that the market posted actually came out of a very well-defined wedge pattern formation over here. And in fact, the ride up that eventually led the market to tighten up and squeeze inside of this wedge pattern also came out of a well-defined flag pattern right over here. And as we speak right now, we're actually seeing the market once again enter into a period of very sharp consolidation, very well-defined consolidation, following a very sharp move down, which can be classified either as a flag pattern, inverted flag pattern, or you could just look at it as a wedge pattern formation over here, or just a period of consolidation that the market seems to now be breaking down under from. Of course, this area also lines up with a very important former support level, and if we stretch back a little bit further, we can see that this area actually lines up with another period from way back in the past in 2016, when the market really held as resistance at the 1.16 level over here as well. So we have former resistance turning to support and turning into support once again and holding up as support for now. But just looking at the close that we had on Friday, it tells us that the market could actually be gearing up for an eventual break underneath the 1.16 level and also past this pattern formation over here. As you can see, the market is already sort of poking underneath the rising support trend line of the pattern over here. Looking at it from a more longer term perspective, you can also possibly classify this as a head and shoulders pattern. As you can see right over here, maybe not as well defined unless we see the market sort of push a little bit further up, more in line with this left shoulder over here. But you can still possibly classify it as still a typical head and shoulders pattern. We have a left shoulder over here, we have the head, and we possibly have the right shoulder over here. So if this was really to play out as a head and shoulders pattern, theoretically we know that a technical trader should ideally expect the momentum coming off of a head and shoulder breakout pattern should be roughly equal to the size or to the distance between the head, the top of the head, to the base of the shoulders or the neck, so to say. So if we really just extend this down further to match the two distances, it sort of interestingly lines up with all of these lows in this period of consolidation down over here. So really, if this were to play as a typical head and shoulders pattern, we would expect the market to possibly try and push all the way down to here. But for now, really, for the coming week, we really expect the market to possibly just continue its way down and not only just break underneath this this wedge pattern formation or flag pattern, or break out of the head and shoulder pattern. We also expect the market to break out of this former support area, possibly gaining on even more momentum and the strength that it needs to continue to push down. Okay, so finally we look at the 10-year Treasury note futures market, which over the past week, in fact for the past several weeks, has been in a range-bound market phase. This past week, we saw the market sort of rebound off the 119 level, which is a more shorter-term support and resistance level. We've had indications where price bounced off the 119 level in the more recent past. Last week, we saw price sort of push down to the 119 level, hold as support here, and the last couple of days basically belonged to the bulls as the market rebounded off the 119 level. Part of the reason for the rebound is, of course, the fact that we really do not have any kind of dominance, any kind of strength behind the bears here, or the sellers for this market. Neither do we have any kind of strong resistance or a strong inclination from the bulls to enter the market either. We did see a phase of trading here where the market was heavily favoring the bulls for a while, but really just topped out at this former resistance level. We had a swing eye over here, and the bears were really just able to take price right back down just as hard. Again, suggesting that this market overall has just been in a very tight range. But really, looking at it from a technical trader's perspective, it shouldn't really come off as a surprise at all if you are aware of where the market is in terms of the more bird's eye view of the situation. So just switching back to the weekly time frame here, it's obvious to see why the market is consolidating and is mostly indecisive at the current price levels around the 119 price level. Because the last time the price was here, way back in 2011, we had a similar reaction to what we're seeing right now. We had a sharp period of selling for this market where price then entered into the territory of the 119 region. It consolidated there for quite a while and was very volatile before the bulls were able to take control and basically reverse not just the move that the sellers were able to create prior to the consolidation phase, but also just for a very, very long and extended and a more longer term up move. To expect a similar kind of a situation or the exact same situation again would probably be naive, but like we said, it's just not surprising at all that the market is sort of consolidating here after the sharp move down at the 119 price level. Just going by the possibility of history repeating itself, we would ideally and typically expect the market to make a sharp move back up, possibly towards all these lows over here. Either ways, we've never really had an extended or more rounded pullback towards this former extremely important support area. We've of course had multiple occasions when price bounced very strongly off of this level over here. We did have an initial pullback before price had continued its way down. We didn't really have an extended pullback up towards this former support area. So provided that price may want to do that again, we could see that extended move back up, which could remind us once again of the move that the price made at these price levels way back in 2011. But of course, past results may not always be indicative and predictive of future results. We're not absolutely calling for the market to make a strong move back up again just because it did so in the past. Like we said, the market is really just range bound at this stage, and we're not seeing any kind of major momentum build up towards the upside or, for that matter, to the downside. So the market's really just consolidating, but we will be on the lookout for a possible build up towards the upside or maybe even to the downside if the market is to just penetrate underneath the 119 level, maybe pull back, test it as resistance and continue its way down so as to continue with this more longer term bear run that we've had for this market.